Welcome back, investors and stock market traders. Jeff back with another video. So I've recently had a student ask me a very interesting question, and what this person asked me was, is there a way to short stocks on M1 Finance? So M1 Finance, very popular platform. What really draws people into it is the fractional share buying. I've been using it for about 3 years. I absolutely love it. I don't think there's a better platform, in my opinion, for long-term investing. You really have so many advantages. Number one, you're not paying any commission costs. Number two, you can buy into any stock using fractions. And you could also say Robinhood offers this same type of thing on their platform. Zero commission trading, and you can buy shares fractionally. So I know people are really attracted to this simply because you can get into the expensive stocks and not have to spend much money. You can invest in Tesla and Amazon and Google and Chipotle Mexican Grill and Shopify, all these stocks that are over $1,000 a share. All you have to spend is $10 to get in them. So getting back to his question, I sat there and thought about it for a minute, and I said, you know what? Here's what I'm gonna do. I'm gonna research that a little bit more, and then I'm just gonna make a video and put it on YouTube, because I think this could be a very useful strategy to keep yourself some downside protection in your portfolio at all times. And would probably be better than doing actual short sales, because you don't have to have margin and you're not going to be getting charged any marginal interest. So there are a lot of perks and advantages to this, and pretty much this is just a strategy you could deploy while you're investing in your stocks long term and you're adding to positions. You could also be building some short positions. And in the case of March, where we had the big stock market crash due to COVID-19, you could really capitalize on a situation like this by slowly and surely building on a couple short positions. So this is going to be a fun type of video. Two things I want to mention though. First, these videos are for entertainment education purposes only. Always do your own due diligence and don't blindly follow me or anyone on YouTube in and out of trades. Second thing I want to mention is that for the month of September, M1 Finance has bumped the referral bonus up to $20. So they usually pay a $10 bonus to sign up. Now it's $20, and I'll have a link pinned down in my comment section. You can use that link and then sign up for a cash account, and then of course fund your account with at least $100, and you'll receive $20 free. So that's a pretty good deal. You know, the bonus kind of goes up and down, but I do want to share this with people. If you don't have an M1 Finance account, I would really suggest signing up, and especially now with the bonus a little higher, getting a little bit more money. Like I said, by far my favorite investing platform. I use it every day, so I don't necessarily trade out of it. Make sure to get signed up if you don't already have an account. Now let's jump into this video, guys. Before we get started, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. The first thing we're going to do, let's go through a couple of these ticker symbols, and I'm going to explain to you what they do. So you're not exactly shorting stocks directly, but you can short all of the major indexes. And just for fun, I even found an equity that we can buy that would be going short on gold. First one we're going to talk about is SQQQ. This is the Pro Shares Ultra Pro Short QQQ. So, and basically what this equity does, it does the exact opposite of what the stock market does. As the stock market goes up and up and up, this equity is losing value. So it's just inverse from the stock market. The whole concept here is you could kind of buy into this equity a little at a time. And keep in mind, with M1 Finance, you could just spend maybe $10. I have the 1 year chart pulled up right here, and this is actually on a reverse split basis. So let's do a little simulation here. Let's go back to October of 2019. Let's say during that period of time when this equity is trading around $150, if you would have taken a position there and maybe a month later taken another position, so 150, 135, then you buy again around 125, you buy again around let's say 115 and then 100, and then you buy somewhere in the 90s, and then you buy it again somewhere in the 80s. Now, I don't know, I'm not going to do the math on it, but just off the top of my head, that sounds like you're going to average out to about $100 to $115 cost basis. Then, of course, we all remember COVID-19 moved in the United States, and there was about a month where the stock market crashed really hard. Now, this equity is going to start going up, and it even seen highs of $160 and $170 during that time. So, I know how it feels to be in the middle of these things. It's very difficult to pick a bottom. You're never going to quite know where the bottom is going to be. You can try to get close, and sometimes you might panic sell, say, hey, look, I got 10 or 20% on it and I'm happy. But most of the time, these type of things don't last for long periods of time, maybe a month or two at the most, and that would give you an opportunity to sell and make money being short on the markets. And then I think the really cool thing is, obviously, all the stocks that you're long on, the value of those are going to be dropped off, and this would give you immediate funds to beef up those positions. Even like I said, if you had $1,000 invested into this and you got a 40 to 50% gain, you cash out, that gives you $1,500 of cash, and you can spread that out to your long-term stocks, your Apple, your Tesla, your Amazon, your Nvidia. Now, since March, the market has pretty much got back on path, and we're making all-time high after all-time high. The reason I present this video the way I do is because we are making a lot of all-time highs, and the market is probably at some point going to be due a correction. This is not a position I would buy every week or even every 2 weeks. It might be something you want to drop the cost basis down on it once a month, and you'd have to be smart. Like I said, set a reasonable budget. Say maybe all you want to use is $10 every time you buy, maybe 20 or 50 or 100. Depends really on what kind of budget you have and what kind of money you have sitting in your account to use. But all we can really do is anticipate the next market crash or major correction. This strategy could really give you an opportunity to actually grow your portfolio while the market is crashing. So keep that in mind, guys. The first ticker is SQQQ. All right, the second ticker symbol we're going to talk about is SH. That's the ProShares Short S&P 500. This is just an inverse equity that's going short on the S&P 500. Basically the same setup and same chart pattern. As long as the market is making all-time highs, this equity is losing value. And when the market crashes, the value will go up pretty dramatically, okay? So ticker symbol SH for the S&P 500. Ticker symbol SDOW, the ProShares Ultra Short Dow 30. So this would give you an opportunity to short the Dow Jones Industrial Average. And then ticker symbol RWM, this is the ProShares Short Russell 2000. And just for fun, here's ticker symbol DGZ, okay? And this is going to be an ETN that shorts gold. Perhaps you're anticipating a big move down in gold because, gold has been on fire the past 2 years. Maybe you feel like it's a little long in the tooth and it's time for gold to correct. This would be the ticker symbol you would use to go short on gold, start building a short position. All right, now hang around to the end of the video because I'm going to go over some of the negatives of doing something like this. There is a few things I want you to be aware of, and I'm not saying this is a wonderful idea. It's just an idea. Just a way to give yourself some protection, some layer of protection against the market crashing. First, I'm going to show you how to add these equities on M1 Finance. You're going to get your portfolio and you're going to click on Edit, and you're going to come right over here at the top and you're going to click on Add. And this is very important that you do this, guys. I've had a lot of people get stuck here on stocks up here in the top left corner. Make sure that you click on funds, okay? If you try to search for these equities under stocks, you won't find them. So make sure you go over here, click on funds, and we're gonna look for SQQQ. Click on that and add to basket. SH, click on that, add to basket. SDOW, same thing, click on that, add to basket. DGZ, and now the Russell 2000, add those. Now you can see down here that you got a tab for each one of your equities. So what you're going to want to do from here is go ahead and click on Add, and now they are all in your portfolio, and you can adjust the percentages up and down to how much exposure you want for each one of these equities. Again, my suggestion, don't put a lot of money in this. I wouldn't even invest in this every week. This would be something I would do maybe once a month. Now, once you have all your percentages set up the way you want them and you're happy with it, you're going to go over here and click on save. And now your portfolio is going to be set up and ready to go. All you would have to do is buy a slice or go directly to each equity and buy them how you want to buy them. And that's pretty much all you would do. Then, of course, like always, keep an eye on the markets. If we do get a big crash and a big correction, make sure you're selling these at a gain, you know. Tell yourself you're 25, maybe 30, 35%, somewhere in that range. When you get that kind of a return, go ahead and sell and take your gains. All right, now quickly before I log off of this video, guys, let me speak to my level of experience. Let me tell you why this might not be a great idea. Perhaps you might just be waiting a very, very long period of time and you might not get a gain. Like I said, this is more of an anticipation move. And I'll give you a perfect example. I hear a lot of people saying we have an election coming up in the next 2 months, and depending on who gets elected, if this person gets elected, the stock market will crash, and if this person gets elected, the stock market is going to boom. I hear a lot of that chatter and talk. So if you really believe that, there might be a major stock market crash or correction just around the corner, because the presidential election is in 2 months. The downside to doing this right here is we might not get a significant crash or correction for 2 or 3 years, or maybe even a year. You're going to be building on this position and we might get small corrections and dips, but you might not get that significant crash in overall stock prices to really get a return. So that would definitely be the downside, is that you just simply might be waiting a very, very long time to ever see this return. Again, like I said, I'm not saying this is a great idea. I'm just saying it's an idea, and I'm showing you how you could short stocks here on M1 Finance. So that's all I got for the video, guys. Go down to the comments, share your thoughts and opinions with me. I always do enjoy hearing that. Thank you, as always, for watching the video, and have a great day.